All right. How's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. So I'm gonna do an updated, DD on Genius Group GNS ticker. I'm gonna be as fair as I can. Last time I did it, if you didn't see the previous one, I do have a link. But there was one thing that changed mainly, besides obviously the share price, which is the shares outstanding actually changed, and it was because there was an S1, like a hidden clause in there that if the moving average was over a certain amount of days, it unlocked a certain amount of shares, which is why actually once it went over, I think it was like five something, there was possibly some notes convertible that happened, and as well as there were these this hidden clause that basically unlocked a bunch of shares. So I do have the updated numbers, so that way people can kind of understand. So that hopefully they're not still looking at the old, Ortex numbers, or what most brokers don't have updated. So just wanted to give everyone this information. So let's start here, and let's start with the shares outstanding. So, oops, here we go. So I wanted to kind of go over this real quickly, which is that the shares outstanding was originally listed around 24 million, and what ended up happening was inside their F1 filing, they basically had this clause, and what happened was this group basically had this. I'm trying to find if I can find it. They were able to basically unlock a bunch of shares. Like I want to say it was like close to 11 million shares. So they most likely dumped them onto the market because they had been held up. But what ended up happening then was the shares outstanding now has gone from 24 million roughly, or yeah, it was a 24.69 million to now 37.75. Now that's a rough estimate because we don't know exactly how many notes got converted over the 517 warrant, or sorry, notes convertible, which are here. So this is Dilution Tracker, a great site. Given Sean and his team a lot of props. These guys did it. But basically, these August notes convertible, which was if the conversion price went over, 517, they were able to unlock them. That was 3.5 million there. We don't know how many of these things actually unlocked yet, but my guess would be based off the volume, a ton of them. So if not all of them. So let's just assume at this point that between the notes convertible and the S1 hidden clause, your or your outstanding shares basically went from 24.69 million to now 37.75. So that allowed some liquidity into the market, because before it was basically like, I would imagine the FTDs were probably stacking up, but once they had that clause go out and hit, it allowed a lot more shares to flood the market, which has allowed them to now kind of get a little bit better control. Now, here's the interesting thing. This was a stock that literally had very little short interest. Now, this is an outdated one. I've got Ortex here, so we have at least like an estimate. But you can see on this chart right here that the short interest actually was super low. Like, it was being reported super low. Now, this is a stock that has been claiming that there's naked shorts. Obviously, this is all, speculation at this point, because we don't have the numbers and have the evidence that the CEO has claimed. But I would imagine if you're making a claim that that's big, that's that great of a magnitude, you would have to have something that you can prove. Because if not, that's pretty bold to come out and go national and say that this is a huge issue. So a couple key things to look at were basically, if we look here and we can go to an overview right here, we'll get some of these off so we can kind of take a look. The reported short interest on the thing was literally like 36K. Now, if they're naked, obviously they're not reporting those. So that's obviously the other side of this is he's claiming there's naked shorts. I was wondering if it's a combination of maybe there were possibly naked, shorts, as just pure speculation, but They also probably were dealing with a lot of spoofing, which is what happens on a lot of these small caps. These, they kind of drive these things down, they hammer them, and they basically, what they do is they put in orders of, large sell orders and then pull them right before they hit, but it still moves the share price down. And if there's no volume, it can easily move a stock downwards for, on very little actual volume. So that's what spoofing is. And I'm pretty sure that might be one of their biggest gripes too, was because if you kind of looked at these really low volume areas where it traded like 7K that day, and you start looking at the share price just getting kind of hammered down the entire time. Since they basically were incepted, they basically have been bleeding with a couple random spikes here and there. So the question I'm going to raise is, because they're not showing a ton of short interest prior to this, what are we kind of looking at here? So with Ortex right now, they're basically estimating that because the float has not gotten bigger, and let's see if Ortex has kept up and actually seen the shares. See, they're still using a low number. So see this right here, they're still using the 24 million. Now we're using 37 million, but short interest, we'll see how they calculate it, but I just want to show you guys this thing. So prior to that, there was basically no volume, nothing was going on. The CEO comes out and basically says that we're going to take on naked shorts. We've hired, FBI director onto our board to help it, lead this investigation. We've hired lawyers with Wes Christian, the guy that was on GameStop and a bunch of other cases, Overstock, for example. Now, I don't think this is entirely altruistic. I don't think he came out of nowhere and said, hey, listen, we're going to fight naked shorts. I think he knows that there is a great benefit. And so I think I said in my last video, I think this is a combination of somebody who sees opportunity, which is the CEO, and obviously Wes Christian, more publicity for them. These are all things that will lead to more, obviously, people contacting them. More cases means more money. Same thing with the CEO. The more attention this is getting, it's getting PR for his company, first off. Number two, it's endearing him to an entire community of, people who have been basically got the rug pulled out from under them when they turned off the buy button. It's just super interesting, the timing of it, right? Because they came out and they filed like an intent to do an ATM, which is an at the money offering. Days later, they basically announced this campaign. So initially, I was going, okay, it's just a pump and dump. But then he actually started coming through with some of the stuff he was saying, was like, okay, we're taking these steps, and he's actually been backing it up. The thing that's really interesting is these guys are now like on the forefront of like, okay, and all these other, small caps are starting to join them. There is a problem here. So I'm not going to say that there isn't a problem here. So that's what I'm saying. I want to be fair and balanced about this, because I've seen this happen to a bunch of stocks. I've seen it happen to multiple small caps that need money. They're emerging growth, so they're not profitable yet. But at the same time, what these shorts do to them is they hammer down the price. So when they do need to dilute to actually raise some money, they do so at the worst levels, making them dilute far more shares outstanding. And eventually, when they end up with like 200, 300, 400 million shares outstanding, and the share price is at like 26, and they get these companies delisted, they win. And so I think it'd be ignorant to say that there isn't an issue. So I wanted to do this deep dive and kind of share what I'm seeing, what I think is going on. Obviously, these are all just opinions, but let's go from here. So the stock was just down here in the dumps. It hit a low of like 26 cents a share. He launches this campaign with also an ATM. But then here, he actually came through and said that they were going to pull the ATM. Now, I don't know, this is speculation, but did the lawyer say, why don't we register this ATM so shorts kind of jump in on this thing, knowing that it's going to dilute, and then we're going to pull it, like pull the rug out from the shorts, so that way it kind of traps them? Because they can still go through the ATM, but when he pulled that from the immediate future, now all of a sudden you had a bunch of shorts who now need to cover, because all of a sudden they were expecting like another, couple million shares to free up. They got so when they did the notes convertible, this volume has been, I mean, you had 270 million this day, 230 million this day, 264 million, 28, couple small days, and then picked up again, 114 million. So here's where it's going to get interesting, because this volume on a float that's small, they're doing a lot of algo trading. There's more than one person in here. I saw at one point, I think they had like 140 different like people who had like borrowed shares on the stock. And there's not that many shares. This is what's considered a micro float, even after the dilution that I showed you guys here. So what I want to kind of point out now is this. So they go through and they've been kind of consolidating. They gapped up here, got pushed down. So let's go to the actual chart real quick, and let's kind of discuss this. So you have a large gap right here, right? You've got a gap all the way up here, you've got a gap all the way here, and then you have a gap here. So they left a small gap down here at like 47 cents. It's not showing up on this gap tracker for whatever reason, but I do know that it closed a certain price, and I think it was, if I have these levels right, it was at, pull it up, it was down here at like, it hit a high of 55, and I was trying to get a fill at 47, so it gapped up a couple cents. Now maybe that's not big enough for this program to pick up, but there is a small gap down there, so I just wanted to point that out. Then it has a bigger gap here, and you also have a gap here. Gapping up basically just means that whatever the price closed at that day, the next day it opened way higher, so that left an area of liquidity that's not been explored yet. And you kind of look at the chart, it had some liquidity in this range right here, but it kind of moved quickly through that. So this is an area in this part right here around 480 down to 420 that there's not a ton of liquidity that's been explored. So that's one area to look at. We're kind of just looking at this from like a pretty general perspective at this point. So you've got gaps to the downside. At this point right now, there's no gaps to the upside. So how do I think this is going to play out? I think what's going to happen is it's going to get pushed down at some point. Now, where it finds support is a good question, because while this is all happening, you also have a bunch of options right now that are going to be, playing into effect, because the more options that get bought, especially the ones that are deep in the money, meaning like the 1, 2, 3s, while the stock price is higher, the market makers will have to like hedge a certain amount of those, basically. That way, if these things now, I think the next expiry, I'll pull it up right here, GNS options, but the next expiry I think is like 20 days away. So at this point, when this DD comes out, what's going to end up happening is you're going to see, we can pull up the NASDAQ one. Where are the strikes? Here we go. So as you can see, there's not a whole lot of ones at this point right now. You've got a couple in the 2s. This is for the February 17th expiry. You're starting, but these ones right here are in the money. Now, if all of a sudden these ones start getting stacked up a little bit higher, you're going to have to hedge. So the market makers are going to have to hedge for those, right? So you've got a bunch of people right now, and you can see the volume is here. This is the open interest, right? So like this will transfer over there if they are still open. Now, a bunch of people are playing this up here, maybe for the IV spikes. Not sure yet, but at the same time, these are ones that I'm not going to be, if they start getting up there and staying up there, then that's one thing we get to account for. But at this point right now, this is not where I think, I think most of these are going to get burned at some point, unless they have a quick spike and people sell up there. But, eventually, if this happens in the next couple of days, if these ones down here start getting stacked up, you may see them try to actually it may start pushing these, the in the money ones up, which means that they have to hedge more, and that's how a gamma ramp happens, right? So when you start getting that momentum, it will go ahead and start feeding into, as the stock price gets pushed up by the ones that are needing to be hedged, it starts a chain reaction where all of a sudden these now have to start partially hedged, these have to get partially hedged, and as it moves up, that's where a gamma squeeze comes from. Obviously, there's other elements, but that's a basic way of looking at it. Now, obviously, not every one of these calls is going to be bullish, and not every one of these puts is going to be bearish, but we can't see that here. I have to probably get a scanner out at some point and take a look. But at this point right now, I just wanted to kind of give you the basics. So what I think is going to happen here is we should bleed down because there's areas of liquidity that need to be explored, and it's possible even to see a dip down here. Now, there's going to be retail that's going to be taking profit in all these ranges, especially up here, because a lot of them bought in down here. They're extremely profitable. They might sell before they, want to see if it runs back down into twos. People are going to think it's over, but it's such a small float. So the thing I'm more curious about is the FTDs, because during a day when at this point the float had not been unlocked, on this day when you had 270 million in volume, there was only like 10 to 13 million shares like that were available for the public. So I can only imagine the amount of FTDs that would have spiked this day. Now, they're going to be able to get locates because of the dilution that happened, but this is still a very small float. And if retail holds on, I'm not suggesting anyone do anything, but I'm just saying if retail tends to like hold on to this with the float being this small, it's going to get really interesting because there's only a certain amount of shares, and there's only there's only so much you can kick the can before these FTDs start mounting. And the people that will fail to deliver are most likely going to be the prime retail brokers, because retail is pretty much the ones that are probably in on this the majority. There's going to be like hedge funds and some other people that are trading this. Obviously you get your day traders, your momentum traders, all these different types of traders who are trading this. But I think overall there's a ton of retail that kind of saw this and jumped on. Now, let's be fair about all this. This thing has ran a lot, and there are gaps here, here, and here. So is it responsible buying up in this range with a company that does not make any money? So if you cover their balance sheet, you go through it, this company is not profitable. So, all of a sudden being up here, that's a pretty, you're basically playing this strictly for a squeeze. If you're buying, in the 6, 7, 8 range, if you got in down here, you're probably very safe. If you got in here in the middle, you're probably pretty safe as far as the squeeze play. But when you're starting to buy at the tops, that's when you're chasing. In my experience, what I've seen is people see the big green bars, they think they're missing out, they FOMO in, and then all of a sudden they end up selling down here or here, and they get bitter because the next time they look, it breaks through and it has another run, and then they get upset again. They feel like they can't trade, they can't win. So I think you have to look at these pivot points and where you want to find entries if this is something you want to do, or exits. I think you should have a plan. I think it's irresponsible going in and just hoping that this thing will go forever, because the company's not profitable. They're going to find a way of capitalizing on this. And I'll even go a step further. So there was an article written on Supersnock on Reddit who basically did a bunch of deep diving on the CEO. And basically, he even called them he went as far as to call him, a grifter, and West Christian an ambulance chaser. So this is, I think, the extreme. So I think you should read this, though, so you have like an idea. Because I think there's two camps. There's this guy's a white knight. He's coming out to help and save retail. He's going to squeeze the shorts. And then you have this camp where it's like, okay, this guy's got a past where he's not exactly on the up and up on some of this stuff. And I think, honestly, the truth probably lies somewhere in the middle. And I think if you actually, were to take away all the, hoopla of all this, I think that's where most people live, is somewhere in between. Like, nobody is pure good and no one is pure evil. There's always mixtures and intentions. I think he probably has a good intention, which is he's seen other companies and he's talked to other CEOs whose companies have been hammered into the dirt. And what they, are looking for is somebody to actually kind of show them that there's ways of kind of fighting back against this, because so many CEOs will sit there and they have no idea. They get told, hey, just keep your head down, don't worry about the share price. If you do well, the share price will go up, and that's fine, except for with these small cap companies that have cash flow problems. They have to dilute, and these shorts know it, and so they hammer them down. So when they dilute at the absolute worst levels, which means that their shareholders, most of the time retail, are the ones that get punished the most. And so, I think there's a way of fighting back. So I don't think this is all, who this guy is. And I don't think that he's entirely altruistic. He knows that there's a benefit to him coming out and leading this charge. It's getting PR for his company. It's going to raise him and his different entities. They're all getting media attention. They're putting him on the map, and at the same time, it's going to make them money because they're going to have a bunch of cash. And once they have that cash, I think the filing that I saw, or the intention to file I saw, was like they're going to raise $27 million with the spinoff. So I mean, he's going to go from right now he has roughly 17 million. Now this is an estimate, but he has roughly 17 million. All of a sudden, he's going to have an additional $27 million to play with, and they don't burn that much cash, to be honest with you. So he's got like 2 years of cash left. So he's not like in a dire strait like Helbiz, where Helbiz needed the cash right now, and so they were always going to dilute. This guy doesn't need to dilute right now. So what I think their intention is going to be is they're going to try to spin this entity off. I think what we saw. Let me pull it up real quick. I can't. It was like something group, entrepreneur resorts. So they already own 97% of this company, right? So it trades on like a small exchange. And what they're basically saying is they're going to spin this company off, and they're basically going to try to pull an MMTLP or like a Torch MAT thing. I don't know if this actually works, because I think MMTOP, essentially, it was a great idea, but they allowed it to trade for some reason. And, I don't think the CEO realized that it was trading until later, and then they found out like, oh my God, this thing that was not supposed to be tradable is actually trading. And that's when eventually retail looked into it, bought it, and then they shut down the trading before they went private. Now, I think part of that's like, but that basically trapped retail. So, like, what do you do with all that information? They're still working it out with FINRA. It's not a good situation. So I think what's going to happen is they're going to spin off this entrepreneurship resorts or whatever, and they're going to try to do what they did before with a little bit more information, because the guys that Torchlight and MMAT basically merged together. They put off this like entity off to the side, and it was supposed to be non-tradable. It was supposed to squeeze out the shorts, and it didn't work because they allowed it to be traded. So all the short interest transferred over there, and then eventually when people started buying it and squeezing out the shorts, they were going to be delisting anyway and going private. So, it's a big mess is what I can tell you. But, if this is going to happen again, there is a possibility that this does move up, and it, with the float being this small, there's going to be, if there really is naked shorts, there's going to be a lot of volatility on the stock. So there's, if you're someone that looks for volatility because you can make money, either day trading, swing trading, there's going to be plenty of opportunities on this thing, because I think at this point you're going to see a ton of IV spikes. You're going to see a bunch of bleeding, and who knows where this is going to go at this point right now. But I think it was fair to update you guys with the float actually being higher now than it was, because it went from basically 10 to 13 million to now it's a 23.8 million, I'm rounding up, 8 million share float. So it's still very small. That's considered a micro float. That means if there's a ton of retail, like I'll just do you like a little, here, let me pull up a calculator real quick just to show you how small this float is. So we're going to use these numbers, 23 million, 7, we'll just assume it's this, right? And let's just say there's roughly 50,000 retail investors across the world, right? So if you were going to take 50,000 people, it would take about 475 shares per person to lock up that float. Now, when the float was smaller, that number was it was half that basically. But there has been the dilution now. So, but you have to figure, how many retail investors have this many shares? How many, institutions are maybe entering or, exiting? We don't know. We do know that let me pull up my Bloomberg real quick. Or, sorry, I don't have a Bloomberg, but one of our guys gave us this information off his Bloomberg. So give me 2 seconds and I will pull it for you so you guys can see the ownership. I should be able to get it on here. All right, let me try it this way real quick. I apologize for the delay. Let me go through. Here we go. All right, here we go. And I'll probably cut this part out, or maybe I'll be lazy and I won't do it. But here it is. So the CEO does own 9.3 million shares by himself. There's also some insiders here that own 776, almost a half million there, 250 or 263K, 83K. So there is institutional ownership, not a ton. And these guys did add. So Jane Street, BlackRock, JP Morgan, UBS, they all still have it. Citadel actually sold out, looks like back in, September. So they're completely out. They have no position in the stock right now. So those are the long holders that we saw. And in addition, there's a gentleman named Simon. Let me see if I can find it. It's in here. Here. So if I go in here and type Simon Zucchi, who's part of, I guess, the owner of PIN, but he actually has about almost 3 million shares, which at the time was roughly about 12% of the company. So we don't know if he's holding or not. I would imagine if him and Roger were friends, then maybe he's still holding. But I'm just telling you now that there's a good amount of insider ownership, and then we don't see a ton of institutional ownership at this point, but there is at least some. So, all right. Lastly, let's go through and just kind of wrap this up. So I think in the long run, what's going to end up happening is this: we're going to see a bunch of volatility on this thing. I do think it might bleed down into one of these levels. They're going to get some liquidity back, and then we're going to go through and see, probably as long as retail's still holding, we will see at least another, head up, and then we're going to have to see what happens with this spinoff, because the spinoff, technically there's a lot of people now looking at this, whereas back when Torchlight and MMAT merged together, there was not as much eyes on it. There was retail eyes, but like, this is literally getting national attention now. So the combination of national attention mixed with, a pretty large Reddit community talking about this, and also stock twits, you're looking at kind of like this, very volatile, price movement that's going to end up happening on this thing, because, there are hundreds of thousands, if not millions, of retail traders that all invest. And even if they got a couple, I used to have conservative number of 50, but like it doesn't take that many shares to lock up a float of 20 million with retail, especially if there's a lot of attention getting paid to it. So this is going to get interesting. I'll keep updating people, but I hear my kid crying and I'm going to have to go get it. So I hope you guys enjoyed this, and I will talk to you guys. Last thing I'll do is, if you guys are interested, I'll put a link in the description. We do have a Discord group. It's free, and it's just a bunch of us talking stocks. So go ahead and check us out. We just kind of all research together. We don't charge anything, and we kind of just brainstorm and kind of look up filings and nerd out on stocks. So you guys have a great one, and then I'm going to take care of my kid. All right, thanks so much. Bye-bye.